please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me as always is Sonia Shenoy. Sonia, good afternoon. Hi. It's green on the screen. Today's markets are looking healthy. As far as the mid caps are also concerned, they are also in the green. But as we speak, Bank Nifty, which was flattish in trades, has really turned into the red but still on a flat line at this point. So keep an eye out for Bank Nifty, which has been going down in the last few minutes of trade. And one thing which can be a point of worry is the advanced decline, which is neck and neck, but still the declines are overpowering the advancing stocks.
Well, yes, I think, these days, if you see flat market, you're relieved that there's no accelerated selling pressure, right? That's how the market has been for the last many days. So many cuts seen in the market. So today, just about consolidating. In fact, the Nifty for now is, as you can see, up almost about 0.5% or so. It's been a good recovery that we've seen even in the broader markets, up about 0.5% over there. And the advanced decline ratio, yes, it's still in favor of declines, but there's plenty in the green this morning. In the key global trigger, the two-day FOMC meeting will begin today. This will be Jerome Powell's first meeting, and most investors expect the Fed to announce its first interest rate increase of 2018. However, the markets will also be looking for signals on whether officials may step up the pace of rate increases later in the year. In other key data, inflation numbers will be out in the UK later in the day today.
All right, so that was about the global markets. As far as Indian market is concerned, well, absence of any bad news is good news at this point, especially when markets have been so volatile. Now, in an exclusive conversation with CNBC from the sidelines of the 21st Credit Suisse Asia Investment Conference, which is underway in Hong Kong as we speak, well, former RBI Governor Raghuram Rajan talks about the risks to the US economy and also what should it do about its fiscal deficit.
If you look at the U.S. current account deficit, which is how, or even the trade deficit, which is how the U.S. measures itself, given that the U.S. is close to full employment right now, and given that there's a fair amount of stimulus coming through the tax reform, it is likely that the U.S. is going to run a large fiscal deficit, and that's going to spread into a current account deficit and a trade deficit. They're going to spend more on goods from abroad. If that's how they measure their success, well, things are going to get worse because they're going to see that the trade deficit is going to expand. And it's not because others are cheating, it's because the U.S. will be consuming more of foreign goods.
We've got more 30-year conventional mortgage rates at their highest in many, many years at something like 4.75%. People don't know where the story is going. Won't that translate into reticence or a pullback in spending habits and exactly what you're referring to?
It could, but consumer sentiment is very strong even now, despite
But sentiment and actually doing are two different things, you know.
Possibly, but it's not just consumption which is picking up. Investment has also been picking up. And investment spending goes in capital goods, a lot of which are manufactured elsewhere. So given that total demand could well go up as a result of the stimulus.
You know, presidents over in the U.S. have for too long overlooked the trade deficit. Now we've got an administration that says we're not going to let this go any further, and yet they've tied it directly to the prosperity, which seems like, based on what you're saying, you say they've got it all wrong.
Well, I think the metric is wrong. I think there is scope for negotiating some of the barriers to entry for U.S. goods elsewhere. That's a conversation that could be had, should be had. But in terms of measuring how you perform based only on manufacturing seems an overly narrow view of what the U.S. should be doing. For example, the U.S. is one of the largest, if not the largest, service exporter in the world. Now, as you may recall in the recent conversation with Canada, that has been left out of the picture. So you cannot look at narrow measures and argue that this is how we should be measuring our performance. The U.S. is incredibly competitive in some areas of manufacturing, incredibly competitive in services, but not so good in the old manufacturing, the legacy manufacturing. And I think the issue is, how do you move the workers in legacy manufacturing to some of the more resilient areas in the U.S.? That is what their focus should be on, rather than thinking about barriers.
Okay, that's the word coming in from Raghuram Rajan. Well, it's the day of the biggest voices on CNBC TV18. We caught up with the top doyens of the market, Sakti Siva of Credit Suisse and Abhay Lejawala of Deutsche Equities. They concur that the valuations of the Indian market are still not at attractive levels, and they feel that there's still some time to go before you should buy this market. Take a look.
We're still underweight at this point in time. I mean, the reason for being underweight, as you know, are firstly valuations and secondly earnings revisions. So on valuations, India has been in what we call the expensive four club, which is the four most overvalued markets in the region. The premium has been above 50%. India so far this year is now the second worst performing market, and as a result the valuation premium has actually come below 50%. So we are looking at India, but it's still in our expensive four. India has had almost 3 to 4 years, consecutive years of earnings downgrades, whereas the rest of the region has seen certainly quite strong earnings upgrades last year, and even this year the revisions are flat. So India is still trailing the other markets in terms of earnings revisions.
Unlike the last 2 years, it's not as much as a top-down market. It's likely to be a far more bottom-up market. And we think that the sectors that will take leadership are going to be the ones where there is certainty to earnings growth. If your valuation reverts back to your 10-year average of roughly about 16 times or so, and if you assume earnings growth of roughly about 20%, then around 9,400 becomes a floor for the market. There is a view that India's valuation or the market valuation is probably too high and needs to come down. So in our sense, we have to really see how this interplay between fundamentals and sentiment works out. It is likely that the valuation may come down. So our expectation for this year is earnings growth of roughly about 20% and a valuation derating of 10%. This year, much more so than the last few years, it is going to be earnings growth that determines the sectors and the stock selection as well. In our view, consumer discretionary, private sector banks, and infrastructure are the three sectors that will probably take leadership.
All right, so those were market opinions, and important ones are coming in your way, and markets have lost some ground in the last few minutes of trade, and advanced decline is really turning and tilting towards the declines. Take a short break on that note. Up next, we'll focus on some of the stocks like Cipla and GSPL that are making news today. Stay tuned.
Hi guys, welcome back. You're still watching Business Lunch on CNBC TV18. It's still looking okay for the market actually. Still up about 0.3%, holding on to the gains that we've seen since the start of trade. In case you're wondering about the big stocks moving, Bharti Infratel has had a very good run today actually. Almost 5% higher on Bharti Infratel now, and Tata Steel is the other one that's gaining almost a 4% rally is what you're seeing on Tata Steel. Of course, some of these IT stocks have been up and about as well. So Tech Mahindra, Wipro, all looking pretty good. And in the broader markets, it's a bit of a comeback that some of these sugar stocks are making today. So Balrampur Chini is up and about. But GSPL is sulking in trade. The stock is down over 6%. This after the company's plans to acquire 28% from Gujarat Gas. 28% of Gujarat Gas from Gujarat State Petroleum Corporation. In fact, we spoke with Manish Seth, the CFO of GSPL. He did mention that the debt will pile up. They will now have a debt equity of 1:1 from being a zero debt company. So I think that's what the street is a bit spooked about. Listen in to what he had to say.
GSPC, yes, it wants to cut down its stake in GGL. And it comes at a time when we are also enjoy a lot of synergy. So it makes a lot of sense to buy this asset at this point of time. In the short term, we'll have to take some debt. In fact, if you remember, when we took over GGL from the erstwhile BG, the same thing had played out that time also. Yes, in the short term, any buyout would require some amount of debt infusion. But given our strong balance sheet and strong cash flows, I think we can easily take that debt, and I think we, in the past also, a lot of investors have been telling us that it would make better sense if GGL were to be under the full control of GSPL. We have internal accruals, plus we'll be borrowing money in the short term, then which will be refinanced subsequently. Right now, we have hardly any debt. We have only 250 crores of debt. So after this debt will be roughly 3,500. We'll be still below 1:1 debt equity.
All right, another stock in news today is Cipla. Take a look at its intraday chart. It is off the low point of the day and now has been recovering but is still in the red as we speak. And CNBC TV18 accesses the US FDA observations to Cipla's Goa unit. Ekta Batra joins us with all the details on that. Ekta.
Well, the reason why Cipla is in focus is because the Goa plant, received 8 observations in a US inspection, a US FDA inspection, which had taken place in the month of Jan. So now this we understand from the management was a product-specific inspection. However, they received 8 inspections and there was a sort of surprise element to it because the street was completely unaware that this particular facility got inspected, plus incrementally that they had received 8 observations in that particular inspection. However, the management has clarified that they think that these observations are procedural, they are addressable, and they have received some approvals post the inspection having taken place, which is always a good indicator in terms of where exactly the remediation lies or the seriousness of the observations. However, the first observation, which is in fact brought up by analysts and experts, seemed to be a little bit of a concern. Some of the analysts are saying that this could be, probably a repeat observation, and the kind of reply that Cipla does give to the US FDA, and whether the US FDA is happy or satisfied with that particular reply would be something that the street will need to monitor closely. So while most of the observations look procedural according to experts, the first one would probably be something that would probably look like something which will need remediation. And remember that the Goa facility is the most important facility when it comes to Cipla's US operations from India. Around 25% of their US top line is probably generated from the Goa plant.
Okay, thanks a lot for that. Well, the stock has made an attempt to recover, in fact, recovered all of its losses. I guess those observations being procedural in nature is something that's not worrying the street too much. But let's get in some global market opinion now. We spoke with Lawrence Belanco of CLSA. He says that the Nifty will hold on to an upside target of 12,000 in the medium term, while on the downside, he says about 9,700 is the level to watch out for. Also on the Nifty Bank, he sees support around 23,600. Listen in and we'll be back after a short break.
And it is disappointing to be broken the 200-day, and I'm not getting any signs of slowing downside momentum at this stage. So your next support area is basically the August 2017 and September 2017 lows around the 9,680, 9,700 area. I mean, even if we fall down to that 9,700, it is worth bearing in mind that the longer-term setup for the Nifty, and that's a longer-term breakout when we cleared the 2015 and 2016 highs in March 2017. That still gives us an ultimate upside target of 12,000. Nifty Bank slipped below its 200-day initial sell-off in January, and here we're looking at supports around the 23,600 area. So, again, a little bit more downside to it. The interesting thing on the Nifty Banks is that if we do slip below the lows that we made on the 8th of March, we will likely start to see momentum slow. Reversal. So basically my message would be any weakness toward 23,600 area would be a buying opportunity. And like we've got 12,000 as an upside target on the Nifty, we still have an upside target around 31,000 on the Sensex Banks Index.
Welcome back. You're watching Business Lunch, and shift focus to Bank Nifty and take a look at that particular index, and that has really lost momentum in the last half an hour of trade. It has been a downward secular trajectory for Bank Nifty, and you have to owe it to some of the counters which have been really losing strength at this point. In fact, the heavyweights like HDFC Bank has taken a sharp knock. So take a look at that one, lowest point of the day, and ICICI Bank. So HDFC Bank, ICICI Bank, the heavyweights on Bank Nifty are at the lowest point of the day. So keep an eye out on that one. But let's move on to some other developments and the corporate voices coming in on the show. The top corporate voice, Titan Management, is bullish on the growth prospects going forward. And we spoke to Bhaskar Bhatt, the MD of the company, who is confident of 20 to 25% annual growth rate, as well as gaining market share for the company.
We had been targeting a 10% market share, which is more than doubling our current market share. in 5 years' time. Now, if that has to happen, you have to grow at least 20 to 25% annually every year. And we are confident of achieving that growth rate. Combined with that, the higher growth rate in studded jewelry is what we are targeting.
Okay, they're quite optimistic over there. We also spoke to the CEO of Dabur, Sunil Dagal. He is confident of maintaining margins, and he says that the company would grow in the double-digit zone, would continue to grow in the double-digit zone.
I think there would be some reinflation. We are seeing the inflation numbers trend ahead of what we've seen in the last 2 or 3 years. Now, having said that, I think we'll be able to hold on to our margins on the back of price increases and better management of cost. So I don't see margin pressure being really a source of great concern. At the same time, improvement in margin looks a little bit hard to achieve. So the endeavor for the company would be to grow in the double digits, at least in the low teens to mid-teens, on the back of sustainable margins, and I think that is really what our plan is for the next year.
All right, so all consumption-based companies like Titan, Dabur, all of them are looking bullish going forward. All right, another development coming in. Mines Secretary Arun Kumar confirms CNBC TV18's news break says that the rules for mining leases lapsing 2020, remember, to be notified in a week's time.
You see, you want to understand that minerals belong to the state, and they have as yet to approach the center with a proposal. But having said that, the Supreme Court has made it very clear that the mining leases stand lapsed, and therefore the state has also, in fact the Honorable CM himself has said that they will be going in for auctions. Of late we are hearing they are trying to approach the Supreme Court for review. As and when they approach the Supreme Court for review, and if they want the input of the center, we shall give it.
What are the remedies that can be given for Goa miners, especially at a time when the entire mining activity has stopped and there will be a ripple effect on the economy?
You see, there is no executive remedy at present. It is a matter before the Supreme Court, and in case they file a review, it will be for the Supreme Court to take a call on the possibilities which can happen.
Okay. So also I wanted to understand, some of the leases are lapsing in 2020. Will there be rules for those lapsing mines?
Yes. In fact, there were earlier circulars to the effect that exploration has to be done in time, because unless you have exploration, you cannot have auctions. We found a bit of a laxity on the part of some miners, and so we have moved for amending the mineral concession rules, which will entail that the miners do the full exploration by 31st March 2019, so that there is adequate time for auction of mines expiring in 2020, and that production is not disrupted.
Okay, there's a turn of events in the market. What started off as a decent day has now been sold into. So this is definitely continues to be a sell-on rally market. Just look at the intraday chart of the Nifty. It's given up all of its gains. As we were saying at the start of the show, you know, if you get a flat market or no movement, you're actually relieved. But look at that, so much intraday volatility. And it's the banks that are really correcting now, down almost 0.3%. But with that, it's curtains down on Business Lunch. Thanks for watching. Midcap Radar comes up on the other side. Stay tuned.